Let's talk property finance. So a lot of people come to me with varying amounts of money, whether it's 10 grand, 50 grand, maybe they've got no money, they've got hundreds of thousands of pounds, and they all seem to be approaching property as if they've all got the same problem, but they don't. So if you've got no money, you need to be thinking very differently to somebody that's got hundreds of thousands of pounds and earns 50 grand a year. Okay, so I want to break each one down and then give you some top tips around finance and how to approach it. So, for example, if you've got 50 grand or above, you are in a place where you probably don't have a cash flow problem. The reason I say that is, unless you've inherited money, which some people have, and sorry for your loss if that is you, but obviously most people have earned that money through time. So it's saving up money, you've got excess funds, maybe it's refinancing your house, you've got a good job that pays for everything. Now the reason this is so important is, unless you've got $1 million to 1.5 million to invest, which most of us have not got, let's face it, you are incredibly unlikely to replace your income through investing in property. I'm sorry, all right? Very unlikely, especially through passive income streams. The reason I'm saying that is there's a lot of educators out there that go, quit your job through property. Yes, you can by having property businesses, but not through property investment. So people talk about the world's wealthy, 90% of them have property, which is true, but they make their money and they put it into property. It's very unlikely they're making their money from property, especially in the short term. Now, why is this true? Well, think logically. If you've got a property that you're looking to purchase in a decent location, you need a minimum of £50,000. And this is for what I would call a boring, vanilla buy-to-let property. And that's great. But the cash flow is going to be what, 100 quid a month, 150 quid a month? Not a lot. But that's okay. I'll buy properties that are cash flow neutral, i.e. I buy a property and I'm not making anything each month. Now, why would I do that? Because I've got the long-term game. Think about it logically. Interest rates are higher right now. We're in a space where the competition is incredibly low, which is great because I can get access to better and better areas for my investors and myself, of course. What do you think happens when the interest rates eventually come down? Well, obviously, huge amount of demand happens on the properties. What do you think happens to property prices when the interest rates go down? They obviously go a lot higher. And of course, the demand for rents is high and the interest rates come down, so I make more cash flow. But the point is, I don't have a cash flow problem. So then you get into the realms of bigger types of properties. Maybe if you've got £100,000, you might be able to purchase a HMO, a house of multiple occupancy. Does that get slightly more cash flow? Yes, it does, okay? You're definitely going to make more. Well, not definitely. You're more than likely going to make more. But again, if you've got 100,000, I'm guessing making £800 a month or £600 a month from a HMO is not going to be enough for you to quit your job, right? So when you're looking at these from your finance point of view, and I'll go what it looks like financially on how to actually do this in a moment, but just have in your head, if you've got that and you're looking for a purely passive stream of income, then buying a buy-to-let will almost definitely be your best odds to make sure you've got a safe place to park your money. Even if you've got $500,000, by the way, I would be purchasing boring, vanilla buy-to-let properties. So how do you purchase these? Well, if you've got the ability to buy multiple properties cash, then you might want to do that for speed of getting your money working hard for you. You might be able to negotiate a slightly better deal because you're able to give that speed. And then, of course, once you've got the asset up and running so it's cash flowing, you can then refinance the property, which is getting a mortgage on the property, pulling out a load of your money. You'll still be leaving money in, of course, but then somebody that is renting your property pays the interest payment on your mortgage. A buy-to-let mortgage, just so you know, typically is 75% loan to value. If you're buying higher value areas, properties in areas that are like 200,000 plus, you might not be able to get 75%. And this because the rent in comparison to house prices, they're not linear. And what I mean by that is if I've got a £100,000 property that I'm renting for £650, how likely is it for a 200,000 property to be 1,300? Not really likely. How likely is it for a 400,000 property to be renting out at 2,600? Can near guarantee it's not going to be the best way to do it. So instead, really your sweet spot of buy-to-let purchases is going to be between 80 and 150,000. You're going to get a decent return, strong capital growth, and you'll be able to put in 75% from the bank, and you only need to put in 25%. So you're able to buy something like 120 to 140,000 pound property with just £50,000. Now, if you want to get more active, this is where it can get a bit more interesting, because even if you've got 100,000, that money's going to run out, right? So you might be watching this going, well, yeah, but I want to build a bigger and bigger portfolio. Well, you could definitely do that through 3 ways: bridging, private loans, and joint ventures. Let me take you through them. So with bridging, you do want to be careful because you don't want to get stuck on a bridge. Bridging is to bridge the gap between you purchasing and then financing out on a longer term product. Bridging really is to be used for less than 12 months. 12 months absolute max. And the reason for that is it's bloody expensive. But you get a good loan to value on it, you do the works needed, then you get a mortgage on it and pay back the bridging company. You could do something very similar with private loans, and this is where an individual, say like me, loans you the money instead of bridging. You're going to pay very similar rates overall, which is quite expensive, but the better side is you're dealing with an individual rather than a bridging company that could be a little bit more brutal than your mate down the road loaning you it for a set interest rate. So you could go down that route. You also might be able to get a better loan to value. So if you get a great deal, they might be able to loan you the money at a higher amount. Finally, you've got joint ventures. So joint ventures is when somebody goes into a venture with you. They put in the money, you find the deal, put in the time and effort, etc. They fund it all, and then you split the profits 50-50. So I've built portfolios like this with people where I've put in the money. Mostly my delegates, that tends to be who I loan money to, and when build up a portfolio 50-50 on that. And it works really well for people that are money rich but time poor. Now, if you're watching this and you're thinking, do you know what, number one, I've got money to invest, 100 grand plus to invest right now, and I want to be able to raise money elsewhere, but I don't want to put in the time and energy on building that portfolio, then that's what we actually do as a company. So Aspire Property Group, what we do is we help investors build portfolios. So if that sounds like something you'd be interested in and getting support with the finance point of view, just to clarify, you need to be able to get a mortgage. So if you've got a job and no CCJs, court counter judgments, you'll be able to do that, no problem. And you need a minimum of £50,000. So if that is you and you want me to help you build that portfolio, put APG in the comments right now. Otherwise, I'll put a link, I'll pin it to the top. You can click that and we'll have a one-to-one free consultation to help you build that portfolio. Now, you might be watching this and going, that sounds really cool, but I don't have 50K. Maybe you've got 10K. In reality, you're going to have to get active. And I think this is the downside of the property education industry. All these gurus saying, yeah, you can make money while you sleep, quit your job in 30 days, go do this. It's all bullshit. It's absolute bullshit. And I'm saying that as I also run an education company, by the way. But ultimately, if you have the money, you can be passively investing and somebody else can build it, like Aspire Property Group and the call to action that I've just given you, the whole APG. But if you have less money, either save and save and save and save and save, or you need to stop thinking of it as property investment and you need to start thinking of it as a property business. So you can look into lower investment strategies like rent to rents, rent to service accommodation, lease options, for example. In my personal experience, I'm not a massive fan of them, but that's mainly because I know the wealth through property is about owning the asset. So I really like doing deal packaging, which is what I just did a call to action on if you were an investor, right? So what I do in deal packaging is an exchange of value. You don't need to do this, by the way, I'm just explaining it. So you find somebody that has money to invest, like many of you have the money to invest on this channel. You offer an opportunity to get their criteria, match it to a property, and then get it through the legal process and help them build a portfolio. That's what deal packaging is, and you can charge fees for that, of course, for that exchange of value. But if you're not willing to get active or get creative, like a lease option, rent to rent, rent to SA, you just don't stand any chance. And the reason why, by the way, is even if you're looking to build that buy-to-let portfolio or HMOs or whatever purchase option you're looking at, you're going to need to get active with raising the cash. So how can you do this? Well, my top tip will be about building your personal brand a little bit, and it could be through YouTube if you're decent on video. I like to think I'm okay at that. If not, it could be blogs, it could be Facebook posts, it could be Instagrams. And really, you don't need to make out that you're some guru and you know everything. Instead, I like using the line of document, don't create. Just document your journey. Share what you're doing with people. Show what you're learning. Tell people what you're looking for. In investment, there's something called the 3-foot rule, i.e. tell everyone what you do within 3 foot of you. The more people you tell what you're doing, the more likely it is that somebody will go, hey, do you know what? I've got a bit of money, I'd love to invest. Ultimately, property is not a quick game. If you've got the money there and you could get a mortgage, it's a great opportunity right now to get involved with investing. But ultimately, you need to think financially what's going to be best for you. If you have the money and you're looking for passive investment, that's great. If you're looking to get back yourself financially, but you want to be active in this, then probably the best port of call is for you to find somebody to help you get educated. Now, that can be through YouTube. At some point, though, you are going to want to invest in yourself. And yes, I'm biased on this. I've got an education company, so you could come and work with me where I train you on how to do all of this stuff yourself if you've got the time and energy and you want to learn the expertise. But I'm not the only educator out there. Check out some other YouTubes, right? And see who you relate to most that's going to be able to add the most value. But the reality is, property is not get rich quick in any way, shape, or form. Yes, now we make millions every single year doing this, but I've been doing it for 10 years straight, working full time, really hustling, built the team behind me. And so it's a joint effort moving through. But if you're going to jump into property, don't be delusional. Don't get suckered into this. You're going to quit your job in 30 days. You could do it with an hour here or there. It takes time, it takes dedication, and it takes effort. I hope this has been valuable for you. Hopefully it's been some decent tips and techniques on this. And as I said, if you are one of those people where you're sat with the money there and inflation is eroding it on a daily basis and you want to get it working hard for you rather than you working hard for your money, then that's what we do. We can put APG in the comments right now or click the link, fill in your details. We'd love to have a one-to-one session with you. We'll go through a bit of a journey of working out where you're at, where you want to get to, and if we can support you on your journey moving forward. Hopefully this has been valuable. If you're new to the channel, you want to find out more about property investing and everything that comes around it, make sure to hit subscribe and the notification bell. It really helps you get access fastest. So hit the subscribe button down there now. And if you did get value, tap the like button and I'll see you in the next video.